Hello traders, the title of the video is how to begin a game exchanging FX and Euro Australian dollar, a technical analysis. Are you ready to begin a game changing FX and Euro Australian dollar, a technical analysis? Well, let's get started. Right? So what's happening here? Okay, we want to talk about game changing. So what we are talking about here, talking about game changing, we are talking about somebody who can understand, okay, the price structure and know exactly what is taking place here. I invite you now to look at this chart, the Euro Australian dollar on the monthly chart, and tell me, okay, what do you recognize? What is taking place here? Is it bearish or bullish? Will you be prepared to buy or sell this currency pair? All right. So tell me more, tell me more, tell me more. All right. So game changing. So what is happening here? All right. What is happening here is that looks to me that this currency pair was bearish for some time. Is it a trend? I don't want to get into that discussion now. So it went down. It went down for a while. As you can see from 2009 up to 2012 was very, very bearish. After that bearish move, the price went up a bit. All right, now it's doing all kind of ups and downs right here. What is taking place here? For traders that bother to subscribe to the Pro Traders YouTube channel, we're talking about Fibonacci patterns. In order to recognize the Fibonacci pattern, we know that there is, we talk about if there's a downtrend, all right, and then there was a rally after that downtrend. They move from here to here. We call it XA. So this point X for X-ray. This point we call this point, okay, A for alpha. All right. So then we will expect price coming down from the point B. Are you with me? And then the price will go up a bit, forming the point C. And then the price will pull back, okay, all the way somewhere, all the way down here, sometime here, sometime here, sometime further down like this, forming a funny double bottom chart pattern. All right. So, but the most important thing that we are looking for is the ABCD pattern. So there was a down move, then the price rally up a bit, followed by A, B, C, D. Can you see that on the chart? So we are talking about the down move, which is this one here. This is a game changing FX trading. So that down move is this move down, okay? Then we're talking about a rally up that we call SA. Call it now into green. That is the move from here to here. That's the rally. Now where is the A, B, C, D? They are here. A, B, C, D. Let's put a bit of color into it to make it more interesting for your eyes. So we have A, B, C, D. So we can start thinking of, okay, Fibonacci pattern. Is it a Fibonacci pattern? Maybe not. But it looks like a Fibonacci pattern. It has the structure of a Fibonacci pattern. All right. So, but it did not come all the way down here. What kind of a Fibonacci pattern is this one? Well, you let me know. But the point I'm making here, the reason why I'm mentioning this, it may not make sense for some trader. It may look a bit funny. All right. But the reason why I want to point this out before we start our discussion about game changing, FX Euro Australian dollar technical trading, is that right now most technical traders will look at this currency pair and it looks for them bearish because of this double top. Okay, it looks very bearish, isn't it? So you see, there was a bearish move, probably from a top, and on that top here, and it looks very bearish. But personally, I think this is big. It looks more bullish than bearish. Personally, why? All right, why? Okay, because this is what we call. I forget how to put it to you now. So let's analyze this move here. You see, the price went down from here to here. All right. If you use Fibonacci, you apply Fibonacci retracement from here to here, and you will highlight which level, the 50% Fibonacci retracement, which I'm going to color now into. I'll color into pink. That's the 50% Fibonacci retracement. Hold on, please, traders. The pink line there, that's the 50% Fibonacci retracement of the move from here to here. And you will also highlight, stay with us, please, stay with us, please, the 61.8% Fibonacci retracement level. It will become clear to you very shortly. So after a bearish move, there are orders here to sell, yes or no, between the 50% and the 61.8% Fibonacci retracement level. This is the sweet spot Fibonacci zone. In this case, it's a bearish zone because the prior move was bearish. So people are trying to sell here, and they have a good reason to sell that. And those aggressive Fibonacci traders place orders here to sell. So they are trying to sell here. What is happening here? Look at that zone. That zone between the two, a pink line, okay, normally it's a bearish zone. It's a bearish zone because of this move down. But look what we see. In a bearish zone, we start seeing a bullish chart pattern. Look at that. The price formed a double bottom, a triple bottom. Here it is. 1, 2, 3. In a bearish zone. Not only that, so those who start selling first, the bearish seller, they are selling here, but the bulls are coming below that bearish zone and are buying. Why? Because of this dodgy, all right, Fibonacci pattern. Looks funny, okay? It's not very neat. Looks funny. It's because of this Fibonacci. Those Fibonacci traders, they understand what is happening here. They see move down, rally up, 1, 2, 3, forming ABC. You see how the price ran very fast. They try to take it away. But then, those who are selling here, because of those bearish traders that were selling before, they push it back inside that bearish zone, you see. But look, again, the bullish trader push it back up, all right? Is it looking more bearish or bullish for you now? Then they push it back again, and the bullish trader push it up again. Then the bearish trader push it all the way below that bearish zone. Normally, after the price be below that bearish zone, the bearish trader should come back again and sell it more. But look what's happening now. The bullish trader push them back up again. We are now near the top of that bearish zone. The question I have for you, for your game exchanging, okay, FX and Euro Australian dollar, is it looking more bearish or bullish? Personally speaking, I think it's becoming very bullish. This is what we call the negation of a trading signal. Though we are in a bearish zone, we start seeing a bullish chart pattern. The bulls are invading the territory of the bear, so to speak. So primarily up, we have a small triangle here. Can you see that now? Keep your eyes open, please. All right, so now I'll color that one into turquoise. Hopefully you can see on your chart the triangle there. There's a small triangle there. The triangle means anything is possible. You see now? So the price rally up again after a triple bottom chart pattern. Price rally up now is confined in this triangle. Well, what can we say to traders at this junction? We will say to traders, look for bullish chart pattern above that tiny triangle. Any higher low, any bullish chart pattern above that triangle is a high probability trading setup. Any bearish pattern, a lower high or a bearish chart pattern below that triangle is a high probability bearish trending signal. But because of what has already happened, is that if you understand what has happened here, the price went down, which means the dominant force during this move down are bearish, and the bearish traders have a good reason to sell between the 50% and 51.8% Fibonacci retracement zone. They see a double top, a triple top here. They are selling. But anytime the price try to go below that bearish sweet spot zone, the bulls are pushing the price up each time. Now the price now on the edge of the upper level of that bearish zone, forming a triangle. Therefore, we will be saying that this currency pair is becoming quite bullish at this junction. Therefore, we give priority, right, to bullish signal above the triangle, bullish trending setup. Okay, above that triangle, you can see the RSI form a double bottom also below here. It's now going back above the 50 level. We have also the RSI forming, okay, a higher low. But as I explained to you, the reason why I use the word game changing is that when I start trading first, I was using a lot of chart pattern. And naturally speaking, all right, generally speaking, it looks very simple when we are talking about chart pattern. People can understand double top, double bottom, triple top, triple bottom, all the chart pattern, and one can try to trade them. But there are more to it. In order to change, okay, the game of technical analysis, one must combine, okay, other technical trading tools. As you can see here, there was a trend, and then there was a rally followed by A, B, C, D. Now, the reaction here is telling. See how the price ran very fast here. It's telling. The bullish traders are buying here. They came in big time here, they bought it. Bearish traders were very courageous, they sold it down. But as they sold it down, look carefully, my friend, understand what's happening here. The price formed a higher low first time here, tried to go up. And the bearish trader continue to sell. They managed to push it back below that bearish zone, which is very, very important for them. But the bullish trader kicked the price back up again. What's going on? All right, this is a game changing FX, Euro, Australia, dollar, a technical analysis. So at this junction, all we can see to traders, priority to bullish signal above 149.827 and priority to bearish signal below that level. Most importantly, priority to bullish signal above that small triangle and priority to bearish signal below it. If you look carefully on my chart, you will also notice that I draw some channel here, the red line, I draw them red channel, roughly, okay, this point and this point, first line, and then choosing just one point here, this one here, draw another line that is parallel. Okay, as I was showing trader before in other tutorial in the past, okay, measure the width of that channel as we were doing before, and we were projecting it down as the price was going down. You can see that as the price came to the edge of the second channel, it found a support. Now we are coming back near, we are now sitting, so to speak, near the media line of the second channel. Where we are now, we are at a hot spot trading zone. Why is it hot spot trading zone? A lot of traders that are following us all over the place know this is a hot spot trading zone because it's the intersection between the media line here and that pink trend line. All right, so pay attention to the pink trend line, the blue trend line, the pink key level, the blue trend line, the triangle, and the hot spot trading zone. So from this point onward, we can now go, so I'm on the monthly chart, we can go to the daily chart to zoom into it. So this is our pink line, this is our triangle there. You see that, blah, 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 blah. We can draw another triangle within that triangle, but I don't want to do it. Do you understand? We can draw another triangle here. On the daily chart, but I don't want to do it. So this is what's going on now on the daily chart. People are buying on the edge of that triangle, prior to bullish signal above the pink line, all right? And so on, and so on. You see, this is the media line of that red channel. So here it is. Near that media line of that red channel, we have, okay, an inverted head and shoulder chart pattern. in a triangle. What's going on? Okay, so do not assume that it will definitely go out. Prior to bullish signal above the triangle and prior to bearish signal below it. Be aware of the median line and the pink trend line and trade on the edge. As always, we are looking for a trading setup in the vicinity of one of those key levels, and then we implement a top-down trading method to trade it. So like it is now on the daily chart, if you see a trading setup, if you were here, you see trading setup, you use daily chart, hourly time frame, 10-minute time frame. All right. So you may say, Joe, daily chart is too much for me. Okay, you can drop it down to, we can go back down to the 4-hour time frame. 4-hour time frame, you see, it's a consolidation. You can draw another triangle here. As I told you, it's a consolidation taking place on the 4-hour time frame. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. If you like the video, give us the thumbs up. If you dislike it, mark it down. If you find it useful, all right, feel free to share with your friend on Twitter, on Facebook, and also on Google+. So this will conclude our discussion today about how to begin a game changing FX, Euro, Australian dollar technical analysis. In order to begin a game changing FX, Euro, Australian dollar technical analysis, one must look at the price from different angles. Looking at it straight away, it looks like very, very bearish. Now we start looking at it from the viewpoint of a Fibonacci pattern, trying to understand exactly what is happening, and combining, okay, different technical trading tools. It was clear to us that it's not that bearish, but it looks more bullish than bearish at this junction. This is about a game-changing technical analysis. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to begin a game-changing FX, Euro Australian dollar, technical analysis. Have I changed the game of your technical analysis? Are you willing to begin a game-changing FX technical analysis? Let us know in the comment section. Happy trading to you all, and speak to you soon.